It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we start to scratch off the days until Christmas morning, talking your real estate property news as we do every day of the week. And you can hear us on iHeartRadio, Spotify, Apple Podcasts and Amazon. Thursday morning, December the 5th today, and Australian consumers' sentiment towards home buying has improved, as reported by Domain yesterday, with the Westpac Melbourne Institute's Time to Buy a Dwelling Index, and that surged 21.7% to the 3 months to November. And the report says that confidence is stabilising as interest rates level off and inflation eases. That is on one half of the coin. On the other half of the coin, despite lingering affordability challenges, almost 2/3 of consumers expect property prices to rise in 2024. And economists expect modest rate cuts mid-next year may support a market recovery, though affordability constraints could temper the growth. Cooling markets at the moment, Sydney and Melbourne, they are offering buyers better conditions. So let's right now go to Perth and see what is happening there. Joining us is Matthew Hughes, of course, from Capital Advisory. And a very good morning to you, Matthew. Welcome back. As I said, counting down towards Christmas.
Yeah, it's crept up. The year's really flown by with how busy we've been here. And it tends to be a trend every year. It just seems to go faster and faster, doesn't it?
It certainly does. Now, let's have a look at the housing values. How are they currently tracking across Australia from your point of view? And how does Perth compare to other regions out there?
Yeah, look, I'll start nationally. The median prices across the country rose by just 0.1% in November with the latest CoreLogic stats coming out the other day. So that's the weakest national result we've seen since January 2023. And it's being led by a slowdown in the two cities you just mentioned, in the two largest cities, Sydney and Melbourne, now both in decline. The slowing growth, I think, is a signal that the national upswing in housing values is nearing its end for this national cycle. We've seen factors like high listings, declining buyer activity, and a softening in rental growth, all suggesting that the market's stabilising nationally and probably will go through a period of correction. And while the rate of growth has tapered here again from the previous month, it still showed a solid 1.1% increase over November. So the rate of growth is still very good here. And we predicted months ago that it would have to taper from its very high levels. And it's doing that. And I think it will continue to do it for a little while before we see some of these variables removed next year in terms of rate cuts and possibly some action from APRA.
Okay, and there's no surprise that we are approaching the quieter Christmas real estate period. Nice to take a break, but that said, what trends do you anticipate emerging in Perth's property market?
Yeah, this is a funny time of year. I don't expect too many new listings to come to market between now and Christmas. Now that it's taking a little bit longer to sell property, launching something now may not get you the result pre-Christmas that you want. Whereas if you did it 3 to 6 months ago, then we're in a scenario where you run one home open, you get 10 offers and you sell your property pretty quickly. So that's all changed a little bit of late just through this spring selling season with a bit more stock around and a few less buyers around. And I'd also expect the days on market to continue to soften through this period, as well as buyers tend to disappear over the holiday period. But having said that, our team loves this time of year. We're always, even though we take holidays and we close the office, myself and the acquisition team are still searching for properties and still available and ready to act on properties at a time where, whilst there's no new listings, there's still a lot of existing listings on the market. And if they've been sitting there and they didn't sell pre-Christmas, you might find yourself dealing with a seller that's a little bit more motivated to get a deal done. And we find that we've historically had a little bit more leverage through this period. So whilst we want to try and get a break, we'll also be very active just in that one particular task in terms of trying to find some good deals for our clients and acquire a few properties over that period.
Yeah, that's the way. And of course, as I say, a nice break over the Christmas period and the new year is going to be a welcome change. But pushing past that downtime, looking beyond, let's say, the first quarter of next year, property stock levels and growth rates in Perth, what will that be looking like, do you think?
We've still got the number one economy in the country, and I'd expect more of the same next year from that perspective. I'm personally anticipating further Chinese stimulus in the new year to offset the impact of impending tariffs from new incoming President Trump. So if that happens, I think the iron ore price will stay at its healthy levels around $100 US at the moment, and that's what most analysts are predicting for next year. And then if you have population growth continuing like we expect it to at the high rates here in WA, and then if you also couple that with either the RBA cutting rates, which is obviously very likely at some point, everyone's talking middle of next year now, possibly combine that with APRA softening the serviceability buffer from 3% down to something lower, perhaps 2.5%, which was actually recommended to them by the Senate Economic Committee. If those two things happen, I think Perth's going to rebound back to high levels of growth again by early to mid next year, depending on when those things actually happen. But there's a number of variables in that equation. I think regardless of what happens in relation to those variables, my expectation is that next year in Perth will be another good year of growth. It'll be somewhere between moderate and high growth, depending on how those variables play out.
All right, our man on the ground in Perth is Matthew Hughes. When we come back, we'll talk more about the property sales. And have you tried to get a new build going there in Perth? We'll find out the state of play when we come back after this.
Every week, we present so much real estate. Powerful, up-to-date news every morning from 6 a.m. Know your property with us on the Real Estate Podcast.
And right now it is time for another 30-second property tip. We are going to Sydney and to Chris Sherry from Sherry Auctions. Good morning, Chris. What have you got for us this morning?
Morning, Craig. Look, the second tip at the moment would be, and I say this to all my family, to all of my friends, it's bid confidently, bid strong, and allow those other buyers to assume that you are not going to stop at no matter what figure it gets to. I truly believe it. You've got to bid confidently. You've got to bid strong. As soon as someone else places bids, do not think about it. Place another bid directly as soon as you possibly can after that. That is going to stop those other buyers in their tracks. In the event it doesn't and there's more competition invited, at least you know you've given it your best shot. You walk away at your figure and you move forward to the next property and you do the same strategy. You don't change your strategy, bid confidently, bid strong, and there's a high chance that you may get that property.
From buying strategies, a fluctuating market, the importance of data, geographical differences, confidence in the market, rental yields. Stay informed every morning from 6 a.m.
And it is a Real Estate Thursday. You know, real estate is all about the moments, isn't it? And moments within moments, even trends within trends, and forecasts within trying to forecast what is likely to happen in any given property cycle. And patterns. We look for anything that might be changing. And Matthew, are you noticing similar patterns in Perth's rental market as what you're seeing in the property sales at the moment?
No, quite the opposite. But it's more of a seasonal thing. We know that November tends to be one of the busiest months of the year for leasing activity. And so that's now reflected in the statistics we've just seen from REWA. So our property management team have been reporting more activity and more competition for available properties. And that's resulted in the first increase in rental prices on the median rent in Perth for some time. So after a period of explosive growth on the rental price from way back pre-COVID when it was $350 a week to rent a house, then getting to $650 and stagnating for most of this year, now we've seen it just have its first jump for a while, jumping up to $670 per week, which is about a 3% increase month on month. And that's despite there being nearly 16% more rental listings on the market at the moment than the same time last year. So it's doing quite the opposite of the sales side of things at the moment, but I'm anticipating it's probably going to be a bit of a blip on the radar, mainly to do with that seasonal bump in activity in November, and it's something we also see around March as well.
Yeah, I think the blip on the radar is probably exactly the way to call that. And 2024, it has been for some a bit of a year of should I pull the trigger and start a new build or should I wait? Of course, all those costs to factor in. Lots of procrastinating in this current landscape. And with this new growing demand for new construction, which we talked about last time, do you think that is likely to carry on into the new year? Many people will be hanging on to your every word here, Matthew.
Yeah, I think for a little while longer. However, I think the trend what I see unfolding is the market's soon going to start to realise that construction costs and timeframes are trending in the wrong direction again, and the increased demand and pressure that's placing on our labour force is causing blowouts on timeframes like we saw post-COVID. Now, it won't be the same as what it was like post-COVID. It's not going to be that bad. But the fact that it's already quite expensive to construct and the cost of money is still quite high, I think people, when they start to realise that, will rethink their decision to build new. The latest ABS data has shown us that there was just over 1,600 new dwellings were approved. There's a lag on this, so that was from October this year. And you compare that with October last year, it was only about 1,100. So there has been a really big increase in terms of the appetite for construction. And that's obviously a welcome increase for a stock-starved market. But the rate of growth on that figure has already tapered. And I can see it's heading into decline in the coming 3 to 6 months as people start to realise what the headwinds are like in that construction space. So I'm predicting the increasing levels of housing stock for sale and the diminished buyer competition that's out there at the moment will push most investors and owner-occupiers back into the established market for most of next year. And we'll see those new dwellings start to drop off again, which puts us back in the same sort of situation we were in a year ago.
In that space, people are looking for as much information as possible. And right at the start, I was talking about this Westpac Melbourne Institute Time to Buy a Dwelling Index. There are so many of these different reports. I wasn't aware of this particular one, which surged 21.7% in the 3 months to November, as I suggested. But yeah, a lot of information, a lot of these reports, people are across this year and next year. You know, there's so much to try and keep pace of.
Yeah, it's certainly trending in the buyer's favour nationally. And even in Perth, where it's still very much a seller's market, buyers have a little bit more of an advantage than they did 6 or 12 months ago. So that's slowed down the days on market here. And obviously nationally, it's a lot higher and trending in that direction. But a little bit more choice is good for buyers. We've certainly welcomed it as buyers agents because we can take our time. We've got a little bit more leverage and we can start to squeeze people on negotiations again, as opposed to having to pay market price or just above to enter the market like we've had to over the last sort of 12 to 18 months here.
Yeah, well, it's been an interesting 2024, and as you say, cooling market at the moment in Sydney and Melbourne. All right, we'll leave it there, Matthew. You enjoy your Thursday, enjoy the countdown towards Christmas, and I think we'll talk one more time between now and Christmas.
Look forward to it, Craig. Talk to you soon, mate.
From interest rates rising, a shifting landscape, rentals running hot, clearance rates, a tight rental market, we cover it all every morning from 6 a.m. on the Real Estate Breakfast.
One of the things I've learned since the pandemic is we can't be sure of anything because we can't trust a single soul with what they say. We can't trust the economy. We can't trust other countries. We really don't know what the situation is going to be like next year.
You say that you can't pick it for 2025. Danger, trade tariffs, Margaret, trade tariffs, a world global event. I mean, it only takes one, and the Trump aspect in the housing market and all of this.
Isn't that something that's very difficult for us to predict, because we have in the White House a person by their very history has proven to be reasonably unpredictable. So we don't really know how much of what he said he would do before he went in will come to fruition and how much of what he didn't say will actually occur.
We connect you to the best real estate information across Australia. The Real Estate Podcast.